The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, at least we got the comedy section out of the way last night. That's embarrassing, folks, to have something like that put on TV. On both sides. I don't care what side you're on. Anyway, let's take a look at the DAX. As you can see, it's been actually pretty positive. But if you take a look at the FTSE, my goodness, that just doesn't look very good at all. I guess it's related to what the pound is doing. But who knows? Just one thing after another. We did have some nice movement here after the election. Well, let's call that the debate. Might even be the election. Who knows? Here's the chart of the NASDAQ last night, folks. Right after the debate, you can see that the market came down and went all the way back up to make a 78% retracement right at the end of the debate. And then after that, it just totally dropped from 11,430, dropped 250 points down to the number of 11,170, and then we rallied up to a 61% retracement today, folks, at 11,013. Those swings that we had there early this morning, you see the black ones, those were equal swings. And that's what you're looking for. Now, someone asked me yesterday, because they knew that Mark Douglas worked with me here for 3 years. Here in Tucson, and they asked me, how did Mark trade? Well, he basically he traded Treasury bonds. I didn't trade the S&P, didn't trade the NASDAQ. He only traded one market. That was the Treasury bond market. He had a very good handle on it because he watched how the market responded. He used the opening price. He liked to trade in the direction of the opening price, but he watched for repetitions and swings, and that's usually 20 to 22 ticks. So, go back and look at Treasury bonds and see how often they move in ranges of 20 and 22 ticks. And he would look for somewhere around 2 or 3 trades a day. He never did more than 3 trades a day, and he was usually done by 9:30 in the morning. So halfway through the day, he was finished. And that's what he looked for. Anyway, that was simple trading system, and it worked very well. I mean, there was nothing wrong with it. Okay, now let's move on to the trade that we were looking at yesterday. I really want to thank you guys, because when we were talking about it, I said to sell the weakest, and we were looking at the October hogs, and this is a really good example, folks. Here we are coming in to the 1st of October tomorrow. And you can see the number up there. We did complete the big pattern. You can see what that happened. And I said, to sell if it weakened up, which in fact it did. But we were talking about selling the weakest. And if you want to see the real true answer to that, just look what happened. Look what happened when I switched my order from December to from October. Look what happened. We were right up there at the 61% retracement yesterday, just hanging there at 64 and change, and we're trading at 61 and change right now. That dropped 3 cents. The October didn't even move at all. It moved like a half a cent. So you can see by selling the weakest, that was the smartest thing to do. And you can see the objective on this is down another 4 or 5 cents. But at this point, you'd have your stop at break even. But there's a perfect example of you want to sell the weakest and buy the strongest, no matter what you're looking at. So always remember that. There's one other really important thing to talk about here, and that is because they've raised the margins on so many things in so many different futures markets over, because they're expecting some volatility from after the joke session that they had last night. But what you want to do is, if you ever get a margin call, folks, get rid of the things that are hurting you. Don't get rid of the things that are working in your favor. That's really a cardinal rule. In fact, they should make that an exchange rule, that if you've got a margin call, they get rid of the things that are hurting you. But most people, what they'll do is they will get rid of the things that are working so they can use the margin to try to get back on the things that are not working, which is an absolute insane thing to do. It goes back to that old adage, the best loser wins. And what you want to do is get rid of the ones that are hurting and keep the ones that are there. And first of all, there's an old adage that John Hill used to talk about, and that is never answer a margin call, because that means two things. One is your opinion on the market is wrong, and two, you are already at your major risk reward area. In other words, you're at your maximum risk usually. So that's why you never want to never answer a margin call. Just not worth it. It just really isn't, and you don't want to get involved with that. So those are just a couple little things that I thought you might be interested in from listening to the old master himself, Mr. Douglas, when he was here lecturing. We never lectured because we just chatted, but the stuff that he had in mind, because he looked at thousands and thousands of accounts, and he found that those were the things that made people win or lose. But as I said before yesterday, the two main reasons why people lose is one is they put their stops too close, and the second reason is they don't use stops at all. So what does that tell you? It tells you that they have to have a strategy for risk control. And if you don't have that, you're going to lose. And that's how these people lost the money. After he interviewed hundreds and hundreds of these people at Merrill Lynch, he realized what they were doing is they were watching the machine. Now, this was back in 83 and 84, and 1983 and 1984, and this is when we first started getting data like everybody's looking at here today. We didn't have that until 83 and 84. That all started with CompuTrack and stuff. And then Joe DiNapoli, who I didn't get to talk to last night, he wanted to watch the debate, so I'm going to chat with him tonight. He had a little thing. I can't remember what it was, but it was a data service that drew the charts and everything, and that's he made a living off selling that thing. But the trouble is, people start staring at those machines, and that really doesn't. That's it. Now, Duffy's asking a question about what is your strategy for setting up a stop level. Very simple, Duffy. If you just look at the harmonic numbers, that you look at on these things, and just take 1/2 of the harmonic number or the whole harmonic number. Like on the Treasury bonds, the harmonic number is around 22 ticks. That's roughly it's around $600 and some dollars. You want to cut that in half, make it $300. So that's basically how you get ready to look at it. That's really what you're watching. And if you study one particular market and really understand it, that stuff will be made available to you. I mean, you just literally look at it, because all the market does is go back and forth doing the same thing every single day. Now, some days it does differently because of the big ranges like we had last night because of the debate, but it goes right back doing what it was doing before. So that's what you try to watch. I think the key level today to watch in the S&P is at 3340. If we can get that above that level, we got a chance for market to be up. But really, the market has done very little. I mean, we're only off 60 handles. That's nothing when you got swings like we're having here, 60 handles. Remember, we were up, I think we were up 250 handles just the other day in the NASDAQ. So that thing to swing 150 or 200 means nothing. That's just backing and filling. There's not anything exciting about that other than watching it. So,
if you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I'm going to change the strategy here a little bit. Instead of looking at some of these markets, let's look at how you set up a trade, and I think that's the most important thing, and we'll rely on what Mark used to do, and that is watch for the repetition. You got to remember two things that he really believed in, and he talked about it all the time, is you don't know what's going to happen next, and the market's going to surprise you probably more times than you want to think it does. The second thing is, and this is the most important thing about trading, folks, is you don't need to know what's going to happen next in order to make money. You just have to react to what you're seeing. You know, let the market give you the information of where you think it's going to go, but you don't know what's going to happen next. Nobody knows that. And so, you know, that's a real strong factor to remember. It goes back to those four things of why people fear. All those fears are ridiculous because you don't have any control over any of them. You have no control over whether you missing out of a move or you know, all four of those things. I can't remember any of them right now, but they're certainly you know, the fear of losing out, the fear of losing money. I mean, all of those things, you know, they're all there. And but the fear of being wrong, you're going to be wrong a lot. Give me a break. You know, that's the main thing of that's what you're paying attention to. So keep in mind that that's what you really want to try to do, is to try to prepare yourself for this. And the way you do that, and I'll just give you an example of a young man that's doing a great job trading just the euro. Let's just get this up here. Now, you want to see something that's really quite simple. This is the euro here over the last several days, going back to the 28th. Now, this happens to be a 5-minute chart, so that's just one day. But this is what he tries to do. He look at this. He looks for a little. You see that red box that's in there? That's right near that's the opening price. Okay, and he's looking for the little ABC that occurs right around the 382 there at 11,1685. And look how the market just keeps going up. I mean, it just makes these beautiful ABCD patterns all the way up to the high. And, you know, that's basically all he was doing. And what he did was, and this is the real interesting one, you'll notice the retracements after the red box, you know, they're pretty much equal. So you'll see that the market reacted for about 2 hours, which is about, you want 20 of these little bars, you'll see here that it pulled right back to that 1.27 expansion where the old high was, and boom, it rallies from 11715 all the way up to 11760. Now, you might not think that that's a lot of money, but when you're looking at a margin that is very, very small, that's terrific. You can that's $100,000 contract, and you can trade that for day trade margins around $900. I mean, their day trade margin for the S&P, folks, is 7,500 for heaven's sakes. So that's why you want to plan yourself to try to do that. So you've got to find a strategy that works for you, that you can believe in. Then you got a chance, to do this, because it's not rocket science, folks. Like Mark said, trading is simple, but it's not easy. The reason why it's not easy is you don't have a plan, you don't study the market. So that's the main thing to look at. Pay attention to the crude oil right now, folks, at this 39.70 level. This is a really key level that we're watching here. So watch that here this morning. It's going to be very, very interesting to see how it handles that level. If we get much above $40, that would be a sign that it's probably going to go up, but we should stop somewhere around this 39.70 level that we're looking at right here. So that's an important thing to remember. Let's get back to the copper. Yesterday we had a question about it, and the same question's coming up. Not really too much happened. Copper sold off a tiny little bit, but we're still trading high, way above that 291 level. At least we were this morning. I haven't checked it as of yet. So it's still acting like it's relatively ready to have some type of a little bounce from these levels, and that's what we're looking at. The interesting one is gold. The market that we made yesterday, I sent a video out. Those of you that got the 24/7 video, the two things that we were looking for yesterday was, one is the S&P to get down to around the just a little below 3,300. We got to 3291, I believe. That was when the market was still very, very high. And then also to buy the gold. Actually, it was short the gold at 1905, and it covered around 82. That's exactly what it did. It just dropped $20-some, and all we were doing is watching what had happened the previous day. That's all we were doing. The 1905 happened to be the 382 retracement of the whole move. We hit that late in the afternoon, and then it went all the way down to, I believe, 82 last night, and then rallied back up and just made a high at 1906, and then backed off from there. So the 382 number in the gold has still held by by a small margin, but that's it. If we get above 1910, then that'll tell us that this thing is getting ready to go lower. But as we look at it right now, we're still in an area where we could get a pretty substantial decrease of about $17 to $20, because that's how those are the swings that it's running in gold. And there's how you determine what your risk is. If you're looking at a $17 move in gold, that's $1,700. And I don't know anybody that's going to use a $1,700 stop in gold. But you cut that in half, you're looking at $800. Well, that's sort of acceptable. And if you trade the smaller size contract in the gold, now you're looking at roughly $200, and that's tradable. So that's it for the smaller account. But if you've got a big account, you can swing with a $1,700 move, because if it's moving, $5,000 at a time, $1,700 is not that much. That's only 1/3 of a swing. So, those are things that you got to consider as the volatility of the markets that we're watching here. I've had a request here to take a look at Bitcoin, because I think the Bitcoin is getting ready for a pretty good move up into here. You'll see that we made that 61% retracement there the other day here on the 3rd of September. You'll notice that was a 135 pattern, lined up pretty nicely. We haven't really done very much. We went up and had a 135 on the downside. We're in a very, very tight triangle now in the Bitcoin. Anything above 11,500 sends this thing higher, and anything below 10,000 sends it lower. So that's the way it looks like in Bitcoin right now. But it has a bullish bias, folks, because look at the move from March. I mean, this thing went straight up, and the only thing it was able to do was to make a 382 retracement down there at that 9,400 level. So that's a very, very bullish chart on Bitcoin. Now, some of these other cryptocurrencies, and there's hundreds and hundreds of them don't look nearly that bullish, but that's what we're seeing now in the Bitcoin. I think Ethereum is acting better than Bitcoin from what I hear in the news, but again, I don't even follow that. Now, here's one where we want to thank our friend. Oh, we've got a break coming up. We want to talk about natural gas here, folks, because Mr. Z has sent out a little alert to be looking at the November natural gas and not the October. And you better pay attention to that, folks, because that fellow knows what he's talking about. So we'll talk about natural gas when we get back from the break that's already started. I don't hear the music. Wow.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archive subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, I'm back, folks, and I posted the chart that Mr. Z had sent out to the folks this morning with his email service that you should take advantage of. Anyway, what he's showing here is we switched over to the November contract, and because there's a huge gap between the October and the November. That's just the way the delivery sets up for that. But when you're trading the November now, you'll notice that it's had a really big sell-off here over the last several days after making that high. And I was asked, how am I handling that? And basically, here's what I try to do: is I watch basically my favorite charts are 15 minutes and 30 minutes, and then when I get down ready to look for a trade, I go down to the 5-minute. But you'll notice here, since the 25th, you'll notice that we have been, heading down, right? There's been no question that. Now you can see that the rallies that we had have been roughly equal. They've been from 271 all the way up to 282, so they've been rallying about $11. And this is what we've had this morning. Look, you can see at the far right there, we went from 42, you add $11 to that takes you to 53. So it's repeated itself over and over again. So that's a place where you want to look to sell the natural gas. I don't know where it's trading right now, but at 2.53, that was a place to do it. And if it gets any higher than 2.53, a $200 risk, that's all you have to risk. That's as simple as you can possibly get. And you're just watching for repetition. That's all you're looking for. Now that's really quite simple. In order for this thing to work, is you've got to look at it and study it and study it and study it and prove that it works. And then when it does, you've got something that'll work that belongs to you. You have to identify that belief, and that's what you have to look at. That's what I remember. You got to remember, your profits don't come from one trade, folks. They come from a series of trades. That's an important thing to remember. That's people forget that, but and in fact, this is why I'm trying to go through some of this stuff, because I keep Mark's manual here on how to become a disciplined trader. It goes, my God, this goes back to 1987, believe it or not. And it's really great stuff. It's still good. And this is some of the stuff that he had of doing the things that you want to do as you're doing some of these things. One of the things that you have happen during the day that is really important, and that is things can change in a heartbeat in these markets. As you know, with the news coming out, you've got to be able to respond to that. And the only way you can do that is to protect yourself, because if you're not protecting yourself in there, you're telling the market that you know more than what the market does. And boys and girls, that just doesn't make any sense. That's what you've got to be doing, because we have unlimited chances here. But the problem is those are going to be limited heavily if you don't use a stop level. Now, give me a second here. I wanted to check to see how these things are doing right now, and we're still setting at the major 61% retracement here in the S&P. That came in at around 35, I believe. It's trading at 31.5 right now. We're setting at the 61% retracement here in the NASDAQ too at 1323. And now I realize that I don't have data. Shut the front door and raise the rent. What happened here? Oh boy, technical difficulties. You got to love them. I have no idea what's going on, folks, so we'll see. That number in the crude oil was at 39.60, I believe. I don't know what the high was. I know it got at least that high or close to it. The high was 39.55, so that missed it by just a little bit. But I am flat out of data. I guess I'll have to ask somebody here in the den to give me the last price of the since everybody's watching the E-mini, if you'll give me the last price on that E-mini S&P, we can see if these numbers are holding yet. But they're so accurate that you want to be able to do that. And since we don't have data, I have to rely on some of the other things that we've been talking about here. And it's at 43. See, so it's jumped up above the 61% retracement. So it's back at that area where it's got a chance for a bullish bias. You've got to pay close attention to that. That's why these numbers are pretty good. How about the number in the November natural gas? Did it hold 253? And did the crude oil hold 395? I'd like to know that, because those are also key numbers that we're paying attention to. That's really... really, really important. Yeah, there we go. So that's held up relatively pretty. There's a perfect example here. I think I I think I'm looking at good data, but for some reason, the data has stopped. And believe me, I'm checking it on another machine, and it still hasn't come up. So I've had trouble with it all morning, and now it's doing the same thing. Why it is, I don't know, but I just will not worry about it too much. Anyway, I have let's get back to that euro position, folks. We got up to the 382 yesterday in the euro. And it would be Comcast because that's what I use. And that's for my internet connection, but that has nothing to do with my data. My data comes from another service. Hold on one second, folks. Okay, if you have any questions, it's 877-927-6648. I understand the lines are really backed up today, but keep trying. You might be able to get through, which would be great to hear from you, and we'll see what we can help you with if you have any questions. Yesterday, if you remember, we were talking about the euro making a 382 retracement, and that's exactly what we did, folks. It was, really much spot on, and we started to back off a little bit this morning, which means the dollar is still relatively strong, and I still think the dollar is still going to have a heck of a move in here. But until that time, we'll have to wait and see what's happened. The key figure to watch now in the S&P, since we went past the 33.35 level, is to watch the 33.51. If we start getting above 33.51, it means we're probably going to go a little bit up. These markets are acting relatively strong, folks. I mean, you have to say, it doesn't make any difference who was in the debate yesterday. The market's coming back. So Mr. Market is making his own decision on whether the market is going to go up or down. So that's the key thing. Someone's asked a question about the natural gas. Just switch over to the November, folks. The November is trading just like the October. The trouble is the October is at a premium, but most of the action now is coming in November because we got October 1st coming in here, and you don't want to be in the wrong side of natural gas into delivery, folks, because those things can go really, really a long way, and you don't want to stand in front of that falling knife coming down. So pay very, very close, to that. That's very, very, very important, at least from my perspective. So that's it. Okay. Here's a couple other things that I want to bring to your attention from some of the work what I did with Mark, and that is when you're doing these exercises to try to find what is going to work, it's not going to happen overnight, folks. The only way you can do it is by baby steps. Do a little bit every day. If you've got a problem with staring at the monitor all the time, then practice baby steps. Watch the monitor for only 15 minutes and then stop watching it for 15 minutes and stretch that out so only watching it 3 or 4 times a day for minutes of 15 or 5 or 10 minutes to get an idea where the market is and not worry. We'll be right back. 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and I put up this chart of the NASDAQ here. It's a 15-minute chart. You can see the swing last night after the debate went right up to the 78% retracement. Then we had the huge move down. Look what we've done this morning, folks. We've done exactly the same thing. We've rallied back to the same 78.6 ratio, spot on. We've already backed off from that. That's how these key numbers set up. So when I give you a number like 3350 in the S&P, all I'm doing is I'm looking at the repetition of what the ratio is, not the swing, but what the ratio of that swing is, because that's where these things shine the brightest, is when you're looking at those ratios. They do repeat with frequency, but you got to remember that the ratios are the things that you really want to pay the closest attention to. So if we make new highs above these 78% levels, that tells you that the market is bullish and you don't want to stand in front of that. But that's what we're watching here this morning, is we're seeing these markets, holding up against these numbers, and that's a very, very important thing to look at. So as long as we don't get above this 11,380 level, it looks like we're heading to the downside. If we don't get above the 3344 level in the S&P, we have a tendency to see it back off. Now look what's happened to gold already. We went up and made a new high at that 382 level at 1906, and we've already dropped $17. We're trading now at 1891. So that's another thing that looks interesting. Now, the crude oil didn't quite reach the level we were wanting to see. We wanted to see 39.65. We only got to 39.62. So whether that's pretty close. I don't know if it's going to mean anything or not, but that's what we're paying close attention to. And I see that I've got data coming back again. I see now we're trading at 2.52 in the natural gas. So as long as we stay below that 2.95, it looks like we have a bearish bias, because that was nothing more than a 382 rally off of that previous high that we made. And believe me, those highs have been very, very marginal over the last 4 or 5 days, because this has been going pretty much straight down. We're now down 40 handles in the NASDAQ from that 78% level, so that's giving it a little bit of a bounce to the downside, but the S&P is actually holding up relatively well. So those are two different markets, so you better trade them by what you see and not what you think, because they can move very, very quickly in those. That's pretty much what you want to remember about. Folks, you can do some guessing in here. There's no mistake in guessing wrong. The mistake is in staying wrong. So if you want to guess on whether something's going to go somewhere and that's part of your trading plan, hey, you can use that. There's no problem with that because you got a 50-50 chance on it. But what you have to do is you have to manage your risk, and that's what this whole thing is all about. So remind yourself that's what we're paying close attention to. Someone's asked me a question about Mark's trading system in the bonds. Basically, folks, it's exactly like we were just doing right here in the NASDAQ. He was watching for repetition, but of course the repetition in the bonds is much smaller because it's a much larger market. So you got players on both sides ready to take positions on either side. The NASDAQ is a relatively small market compared to the Treasury bonds, and that's why you had to handle it, because for the bonds have moved $1,000 today, folks. We are down to an area of major support here at 176.15, and we can show that. I think I can get that up here. We can do a little 15-minute chart on this. The problem is it's missing some data because I'm not looking at those bonds that much, but you'll be able to see it here. You can see the ABCD swings, and what we're doing now is we're setting, right at a 61% retracement of the low that we made back on the 23rd. So that should be pretty good support, but we've had this really big sell-off this morning for Treasury bonds. It is, of course, and it's better to wait at least 2 or 3 bars on this to make sure that 176.16 holds, because we could easily go down to the 78% level, which is 176.08, and that's what I would be looking for, because the last time we had a swing like that was back on the between the 21st and the 23rd. That would equal that, and that's at 176.06. And now, with a little bit of luck, I understand that I've lost data again. Shut the front door and raise the rent. What's happening? We're going to have to get that fixed today, so we'll not worry too much about that as we move on here to take a look at the next thing we want to cover, and that is a question about the stock of Disney. Folks, I haven't looked at Disney, but give me a second here, and I'll see if I can get it up here. And I think Disney starts with a DIS, if I'm not mistaken, and it's laying off a whole bunch of people here, and it's not acting too badly, but it's still way up in the air. My goodness, this is nothing bearish about this stock at all. Let me draw this in so you can see the pattern that it made the top at, because that was a real easy one to see. That was a really nice butterfly pattern. We'll get this up here, and you'll see here that really this is acting very nicely. None of these are any different. I mean, they're acting pretty good. Now, last night I had a request to take a look at the Hang Seng Index, because the Hang Seng Index, we have a lot of friends over in Hong Kong, and with that, we've got the festival coming up tomorrow. That's the Mooncake Festival. That's known as the Harvest Moon here in the United States, but the pretty much China is closed from the 1st to the 8th, just because of the celebration of this holiday, and it's a very big thing. And so that's what we're watching. And now there we go. We got the Hang Seng right here. And it'll only take me a second to get it up here. And you'll see that we've had a really interesting pattern here, holding up extremely well. Had a nice move last night. It was up about 1%. And this is right during the debate, too. They weren't paying too much attention to it. But if you look at this Hang Seng, you see the beautiful Gartley that we had back there on July the 6th, a perfect ABCD. I mean, right spot on, 61% retracement. You can see the 3 drive to a top pattern back in January. It trades well, and it's big. The problem with the darn Hang Seng is they take these half-hour breaks, and they just stop trading and then open a half hour, 45 minutes, or even an hour later. I mean, it's insane, but that's how they do it. You'll notice the low we made here 4 days ago in the NASDAQ, the Hang Seng, was exactly 61%, right on the spot money. And you're talking in a contract that's 23,200. We're trading above 23,580 this morning. So it's started to move higher. Now, how much this is going to react, I don't know. I've drawn this line in because I just tried to describe in the video that this could be a 135 pattern that we're seeing here in the NASDAQ, and that's going to be a very important one. The last time we had a rally, we went from 24,100 up to 25,800. So we rallied 1,800 points. So if you take 1,800 points from the bottom, that's at 2320. That's going to take you right into 2,500, and that's going to be spot on to a 61% retracement. So if you're interested in that NASDAQ or the Hang Seng, that's going to be a perfect one. I'll be watching that because it's setting up to possibly make a 135 pattern. And maybe it's going to go above it, but right now that's what you'd be shooting for. And now if you're in the trade from the long side, you've got your stop just about break even, and you let her rip because you don't know where it's going to go. Just nobody else does either. And with the news shifting every 15 or 20 minutes, it gives you a pretty good idea of what you're watching here. Okay, let's take a quick look here. If I had some data, we'll be right back. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, let's take a look here at the gold market. There's that 382 that I pointed out to you last night at 1905. You notice last night during the debate, it came down right to the 1886, dropped $19. and rallied right back up, made a new high by $0.50, right at the 382 again. And here it's coming down. We're already down almost 20. Well, we are down $19, and it looks like we're heading down to at least the 1873 level, because once we break the 382, that'll tell us that we're probably going to go down to the next significant level, which to us would be the 61% retracement. So let's keep that in mind as we watch these things unfold here. Someone's asked a question about the stimulus package, folks. I don't know anything about that stuff. I'm the last one to know. And I certainly am the last one to know. Now, the interesting thing, since we've been on the break, which was about 5 minutes, we have taken out the 78% level by a lot in the NASDAQ. That's a bullish sign, folks. This market has not been acting bearish at all. So this seems like it wants to go higher. So you don't want to stand in front of that puppy. Remember the really key support down there below 3,300. We went to 3,291. We brought that to your attention yesterday. Those of you that get the videos last night, I sent it out long before it happened that there was going to be strong support down there. And all I was looking at is what happened the previous time it had done that. And that's all I was doing, is repeating what had happened one time after another, because that's really all it does. Sometimes they work, sometimes they don't. And when they don't, you try to stand in front, stay away from it. That's the main thing. Now, tomorrow, I'm trying to get Rich Anderson to be our guest, because we're having some really good move in these grains. We backed off about 40 cents in beans, right down to a really key support level. So it's going to be interesting to see if they hold that today. And we're continuing to monitor the October hogs. They're working quite nicely. So we'll see if that one continues to hold up. But remember, folks, above all, live every day in an attitude of gratitude, and may God bless.